who knows what the fallout will be, but you know who's going to sniff it out before anyone? Bond traders. The bond traders will know what the fallout is. These people are so good. They are the smartest people on Wall Street. Here we are. They will know if Cargo Island gets exploded. Hey, it's KP coming to you live from the New York Stock Exchange. Here's the big guy. John Headland. This is Marcy. Sorry, buddy. All right. This is one of my favorite places to do my Monday night video. Intercontinental Exchange, ICE. They own ICE Mortgage Technology, which owns Encompass, which is still the leading LOS in the industry. And they also own the New York Stock Exchange. So they have this event at the New York Stock Exchange, which is pretty amazing. So I get to do my Monday night video from one of the greatest, F-bombs, one of the greatest places on earth for financial center. So anyway, thank you, ICE, for letting us be here. And EnactMI has an event after this. In 30 minutes, I'll be going down to the NASDAQ, which you guys know I talk about stocks. I'm not a financial advisor. I'm not responsible for your losses, only your profits. But this is a financial hub, and the flow of money is important. Bonds are stressed. There's a new Fed chair, Kevin Warsh. He's being tested. Oil is up. Inflation is rising. We're about to go back to war and re-engage with Iran. It didn't happen. Hit the brakes. NVIDIA is reporting earnings on Wednesday. They are a $5 trillion plus company. They are like the Super Bowl, the end of earnings season, which 92% of companies have reported earnings, beating at basically 28%. Over 18% have surprised the upside, and the average has been 28% growth in earnings, which means the companies are doing fantastic. They're doing well. This time next year, the comps obviously will be harder to beat, but the New York Stock Exchange is the hub. This is where it goes down. So Citadel, they heard them. I mean, all these desks, a lot of algorithms. So the bond market is kind of having a fit. There's a lot of debt. We are at 100%, debt to GDP over that on $39 trillion federal debt and basically a 39 trillion, actually a little bit less GDP, especially if the numbers don't come in. The economy, the underlying economy is actually doing okay, even though a lot of us are feeling it in our pocketbook with higher gas prices. But gas is elastic. You don't have to pay gas prices. You can just not drive as much, not take as many trips. You can also trade off the higher gas prices for not paying for discretionary stuff. The retail sales numbers in April were actually strong, but we had $22 billion more in IRS refunds this year than last year. It's about 3% of retail sales. That will start to wane here in the month of May. And so we'll see if that shows up in the next retail sales report. Other than NVIDIA, you got Target, Lowe's, Home Depot, Walmart. Yeah. They're all reporting this week their earnings for the first 3 months of the year. So it's a little stale compared to what we're dealing with as it relates to the new oil spike and inflation spike and crisis. So we're going to see a little bit more of the consumer later this week. But what really matters the most, of course, is, what's going on in Iran. Hey, guys. What's going on in Iran. And so there was going to be a strike this week. And you remember the first strike. And by the way, I want to admit something. I was wrong. I thought it was going to happen and end very quickly because the military operation was very quick. And then they paused and they gave peace a chance. It was very well telegraphed. 2 aircraft carrier fleets were moved into the Persian Gulf, and then they struck. Since then, they moved a 3rd aircraft carrier fleet in the area, plus an amphibious assault team. And you would have thought that would have been the same telegraph sign. But you know what the telltale sign was? Was the visit to China. The yin-yang of the world. They produce stuff with cheap labor, and we're the biggest consumer. And we got to make sure that we're on the same page with them before we complete the mission of getting rid of nuclear weapons in Iran and trying to reopen the strait. Now, what I want to warn people is, if there is a military assault this week, and by the way, we also paused today, apparently, at least today. I was told we paused for the week, but that's just an article. Who knows what our military is going to do. UAE, Qatar, Saudi Arabia, they say, hey, we're not ready for this. We got to make sure. So we pause a little bit, maybe get some more Iron Dome stuff over there. So we are aligning with everyone that's interested in letting them know we cannot let Iran have a nuclear weapon. And who knows what the fallout will be, but you know who's going to sniff it out before anyone? Bond traders. The bond traders will know what the fallout is. These people are so good. They are the smartest people on Wall Street. Here we are. They will know if Carter Island gets exploded, if more natural gas production, goes offline. How much production will flow through after this is over? Will this be prolonged? They're going to sniff all that out and do all the research and the analysis, and they're going to try and see where they think oil futures will land in the new landscape after whatever happens. I'm not saying peace is a foregone conclusion, because I think they're giving peace a chance over and over and over. Obviously, they're trying to align all the partners, but hopefully peace happens. But whatever happens, the bond market will lead rates. So I want you to hear that again. Yeah, we may have disruption and oil prices may be high for 3 months or 4 months or maybe till the end of the year. Today at the NBA Capital Markets Conference down at Times Square, Gary Cohen, 10-year CEO of Goldman Sachs, it's absolutely amazing. He's like, this is going to take some months to unwind. But just because it takes months to unwind and gas prices could be high and diesel could be high, the bond market will sniff out before all of that when they think the money flow can continue, regardless of what happens with oil. So I want you to think about that. We could have high gas prices through the midterms, through the end of the year, but rates could come down before that. The bond market can sniff it out first. They front run the Fed. The Fed follows the bond market. It's always been the case. And they are front running and testing this new Kevin Warsh, chair of the Fed, who says he wants to shrink the balance sheet and potentially cut. And he thinks the Fed is the reason there's systemic inflation. Well, who's going to pay for all the bonds? Who's going to fund our government? Institutional banks. And so the Bondanistas are attacking today on day one, and they have been leading up to this. So it'll be interesting to watch all that. Again, earnings are working. The underlying economy is good. No hire, no fire economy. If you got a job, it's good. If you want a house and a roof over your head, you're going to pay the rate. You can always refinance later. And that's about it. It's a lot going on. I was really excited to hear, all the different sessions today and all the panels and everything that's going on. So we're excited about the future, although it's going to be volatile along the way. So all we can do is just one loan at a time and keep working it. I will get into energy and some of the data centers and some of the things going on with power around the world. I'll do that on my Monday video. We'll keep this one short. Have a wonderful evening from right here at the New York Stock Exchange. Let me give you a little tour. If you're still with me here, it's one of my shorter videos. Hey, George, what's up, buddy? George Paquette, Spring EQ. So let's get in here. Let's give you a little taste of what's going on. Give you the official. Oh, sorry, buddy. Give you the official gavel. I know. Here we go, right here. There it is. That's where it all goes down. Dave Stone, my man. Nurez, you're on LinkedIn. Let's go. Look at this. You gonna go bang it? You gonna go bang the gavel? Ring the bell? Let's go, boys. James Sison third. You're on it. We're here. Let's go. Last the party as always. Ding, 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 ding. Have a good one. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.